Welcome to podcast number 2, August 2026, by the Yong Real Estate Group. For today's deep dive, we are unpacking a whole stack of local market reports and builder data to really map out the 2026 Houston real estate landscape. Specifically, we're looking at navigating these booming, master-planned new construction markets because, frankly, buying a new build in Texas just fundamentally changed this year.
Oh, it completely changed. And, before we even talk about where to buy, you really have to understand how the rules of engagement have shifted. Because if you just wander into a model home today to look around, you could accidentally waive your right to representation.
Right, which is wild to think about. It's like going to court and accidentally waiving your right to an attorney just by, saying hello to the judge.
That's a great way to put it. The 2026 Texas Real Estate Commission, or TRE, rules now strictly require a written buyer representation agreement before property showings. If you visit a Fort Bend or Cypress model home unrepresented, a lot of builders will flat out refuse to let you add an agent later.
But play devil's advocate for me for a second. The builder sales rep is usually super friendly, right?
Mm-hmm.
They know the product inside out. Why shouldn't they just be your advocate?
Well, because that is exactly the trap. I mean, the sales rep works exclusively for the builder. Their entire job is to protect the builder's profit margins, not yours. When you waive your own representation, you lose the person fighting for your closing costs or builder incentives.
Yeah, you're essentially negotiating against a professional whose job is to maximize what you pay.
Yeah.
But listen, once you actually secure that representation, this is an incredible time to be looking. I mean, Houston just entered 2026 with roughly 40,000 active listings.
Yeah, it's massive. That's more active single-family, townhome, and condo listings than any other major U.S. metro for, the third consecutive month now?
Exactly. We are beating out Dallas, Atlanta, Miami.
Right.
It is very much a buyer's market story right now.
Yeah.
First-time buyers finally have leverage again, especially out in our farm communities in Fort Bend.
And affordability is actually improving, which is the crazy part. I mean, it's improved in 15 of the past 18 months. Even with elevated rates, monthly payments on a median-priced home are running about $106 lower than a year ago.
Which is huge news for anyone who's been, sitting on the fence. Plus, mortgage rates ticked down again this week. Freddie Mac's August 7th report just put the 30-year fixed average at 6.69%.
Right, with the 10-year Treasury easing up slightly, it's modest relief, but it matters when you're calculating payments on, say, a $350,000 Fort Bend home. But with all this supply, you really have to know where the regional opportunities are.
So let's talk about that. Let's talk about the mega projects, because we keep seeing these massive developments dominating the local reports.
Oh, yeah. Take Bridgeland out in Cypress. It's an 11,500-acre development. And it's not just houses anymore. It's becoming this massive employment corridor. I mean, Chevron bought over 77 acres there back in 2024 for an R&D campus.
Which gave them instant credibility as a true employment hub.
Yeah.
And then just in February 2026, the Houston Texans announced the Toro District.
Yes. An 83-acre mixed-use development right inside Bridgeland for their new headquarters, opening in 2029. And the plans actually connect it with the future Chevron campus.
It's incredible. They already have an HEB, an office building that's been live since late 2025, and homes ranging from the 386 all the way up to 1.9 million.
And they're projecting 70,000 residents at full build-out. So buying near where the jobs are landing is a huge, huge draw.
But I have to push back a little. These sound like self-sustaining cities, but what is the hidden catch for your wallet? Because I know there's a catch.
Well, the catch is the taxes, specifically municipal utility districts, or MUDs. Because they build outside city limits, developers create an MUD to fund the water and road infrastructure.
So homeowners are basically paying off those infrastructure bonds through property taxes.
Exactly. In Bridgeland, combined tax rates can hit 3.0 to 3.4%. So on a $500,000 home, you're looking at roughly $16,000 in annual taxes before exemptions. Plus, HOA is around $1,300.
Wow. Okay, but that brings up the 2026 property tax relief changes. Because the state just bumped the homestead exemption to $140,000, right?
Yeah, largest property tax relief shift in state history. Seniors can reach up to $200,000 total.
But, and this is a big but for our investor listeners, what about rental properties? Say you're an investor chasing an 8% cap rate in Rosenberg.
Oh, investors really need to watch this. The 20% appraisal cap on non-homestead properties is actually set to expire in 2026 unless lawmakers extend it.
Right. So without that cap, and with those steep MUD carrying costs, You really need expert boots on the ground to make the cash flow math work.
You absolutely do. You can't just eyeball this stuff online. You need someone to decipher MUD tax rates and negotiate those builder incentives.
Which is exactly why the Young Real Estate Group is ready to serve clients all around Houston. They bring deep community roots, unique bilingual expertise in English and French, and a mission to educate, serve, and give.
Definitely. You can reach out to them directly at 733-855-5563. Having that local advocate in your corner is just non-negotiable right now.
Absolutely. So we'll leave you with this final provocative thought. As these master plan communities turn into massive private ecosystems with their own sports headquarters and micro-governments, will future buyers ultimately care more about the specific MUD district they live in than the actual city on their mailing address? Something to think about.